So let's start with the financial turmoil gripping the world right now. South Korean stocks are following the lead of European and U.S. markets plunging as concerns over rampant inflation and a possible recession continue to surge around the world. The benchmark KOSPI here even slipping below the 2,400 threshold for the first time since late 2020. The massive sell-off follows larger than normal rate hikes in the U.S. and Europe as the Federal Reserve and the European Central Bank attempt to tame skyrocketing inflation. Our Choi Min-jung starts us off.
Just a day after a historic rate hike by the Federal Reserve, U.S. stocks tumbled. On Thursday, the Dow Jones Industrial Average fell below the 30,000 level for the first time in 17 months. The S&P 500 dropped 3.2%, and the Nasdaq edged down by 4.1%. Markets had initially rallied on Wednesday after the Fed announced it would raise its key interest rate by 75 basis points, the largest hike since 1994. However, the figures were reversed as investors feared that the Fed's aggressive monetary policy to curb inflation could potentially result in a recession. And those concerns spread among traders as markets suffered a steep decline from all-time highs. The S&P 500 dropped by roughly a quarter, the Nasdaq was down by more than a third, while the Dow was almost 20% below its all-time intraday high in January. Stocks in Europe also fell significantly on Thursday. The Stoxx 50, a European stock index, dropped by nearly 3%. Indices in the UK, Germany, and France also saw around a 2 to 3% slide. The decline came after the Swiss National Bank raised interest rates for the first time in 15 years with a 50 basis points increase. Meanwhile, the Bank of England also announced a 25 basis points hike. Analysts say stock markets will remain volatile until there are clear signs of inflation stabilizing, as central banks would no longer need to implement aggressive rate hikes. Choi Min-jung, Arirang News.